Welcome to our Taking Stock video for the week ending the 19th of July, 2024. I'm Kien Trinh, Head of Research at Stock Doctor. And today I'm joined by our Equities Analyst, Charlie Song, to stream to you all things share markets. Welcome, Charlie. You haven't been on here for a while, so it's good to have you on board.
Yeah, good to be here.
And before we get started, just a quick yet important reminder, the information we provide today is of a generic nature and therefore doesn't take into account your personal situation. Remember, shares are volatile, so any past performance figures shouldn't be relied upon as a guide for future performance. Well, it's been a roller coaster week for the Australian share market, hasn't it? After hitting record highs, Australian shares are set for a volatile end to the week. And overall, though, the Australian market is tracking the rise on the US markets, which has been driven by a few factors. You've got the artificial intelligence boom, which has now been overtaken by speculation that the US Fed will cut interest rates in September. In addition, there's now greater certainty of a Trump victory in the November US presidential election as well. And perhaps more encouragingly, though, there are signs that the rally is broadening out beyond the magnificent 7 tech stocks to the wider market.
Yeah, however, it's important to focus on the facts rather than headlines. Locally, the rally has not been supported by fundamentals, with earnings expectations remaining subdued as we head into the reporting season. You can see this with the chart on screen, which compares the earnings expectations in black to the All Ordinaries Index in blue. This has led to a PE multiple expansion, which is unsustainable unless earnings start to recover quickly.
Yeah, the divergence is quite stark, isn't it, Charlie? And in contrast, you've got earnings expectations in the US market, which has actually been rising, and that's driven by better than expected results from the last few reporting seasons. However, the underlying issue here remains the same. You've got prices which have risen by more than earnings, and that's also leading to this PE multiple expansion in the market as well, which usually occurs during periods of economic expansion. However, this has not been the case, with GDP growth, both here in Australia and the US, also slowing down.
Yeah, it's quite surprising.
Mm.
From a portfolio management perspective, it's important for investors to take some profits, especially across stocks where the good news has effectively been priced in. Increasing cash buffers allows investors to take advantage of opportunities over the reporting season. Remember to utilize Stock Doctor range of tools such as alerts, watch lists, and the portfolio manager to optimize and prepare your portfolio for the upcoming reporting season.
Yeah, certainly going to be quite volatile reporting season, and also a time for opportunity as well. But in stock news this week, we had wealth management platform and borderline star growth stock Hub24. They unveiled their June quarter performance, and looking at the total funds under administration, that grew by about 35% over the financial year. And this was supported by about a 13% increase in advisory customers. Now, this appears to be in line with market expectations, so we don't expect its upcoming results to contain any surprises. And positively, we're seeing earnings revisions are up by about 4% over the last 3 months.
But unlike net wealth, however, Hub24 operations extends beyond just a platform, with an added service offering which includes portfolio reporting and SMSF administration. Hence, these lower margins operating segments and additional required capital results in Hub's lower ROE and net profit margins compared to net wealth.
Yeah, good distinction there, Charlie. But moving now to circuit board design software business, Altium, which has been under takeover by Japanese chip maker Renesas Electronics. Now, the company is expected to come out of the S&P ASX 200 index. How is the takeover progressing at the moment?
Well, I am the covering analyst here, and I consider the Altium deal to be largely finalized at this point. The company has seen its transactions being approved now by regulators, shareholders, and the court. Shareholders should expect to see the cash hit their accounts at the end of the year.
Yeah, so Altium will be delisted over the next week, but do we think there is better capital allocation decisions to be made here?
I think there are. Clients will find that there are plenty of opportunities to invest in the technology space. Among our star stocks, there is the accounting software business Xero, logistics software company WiseTech, or even the medical imaging pioneer Pro Medicus. It may, however, be prudent to wait for the result announcement over the next month. But investors will need to be mindful that high-quality stocks with strong growth prospects tend to trade at a premium to valuation.
Yeah, we look forward to the results from those stocks next month. But with the appetite for risk remaining quite strong in the market, we've seen plenty of speculative activity. And it's important that investors do not become complacent. Now, one notable example is Zipco, which has risen by over about 300% in the past 12 months, but is currently in an early warning state of financial health.
We remain really cautious of these stocks again, despite rising share prices. Zip's management team would be breathing a sigh of relief this week as they initiated a $220 million capital raising to reduce gearing by paying down debt.
Yeah, very interesting. As we know, capital raisings, they dilute equity holders. And this is also further compounded by the fact that financially unhealthy businesses tend to be loss-making as well. So the equity raising could help Zip become financially healthy over the next year. And this is why we have a rule that a stock must be financially healthy over 2 consecutive periods, just to avoid this short-term injection of equity, which could artificially improve the financial health of the business in the short term. In Under the Microscope this week, we take a closer look at an emerging opportunity within the AI space. And this opportunity can also be found within Tim's growth stocks with potential filter. The company is drone detection technology business DroneShield, but it only has one period of strong financial health at the moment, Charlie.
Yeah, and clients need to note that the company has really only just become profitable, and the share price has performed exceptionally well over the year off the back of the artificial intelligence theme, as well as continuing conflicts with Russia and Ukraine.
Yeah, thanks, Charlie. The company does seem to be having quite strong earnings growth over the first half 24, with their return on equity reaching approximately 20% compared to their net loss in the prior period. But what's been driving this growth?
Well, the growth has been fueled by, concrete substantial contract wins, including a record $33 million order in July 2023 and numerous other smaller contracts. The geopolitical climate and rising government spending on defense has also provided substantial tailwinds.
And we wanted to highlight it this week because despite the strong earnings, the company did experience quite an adverse share price reaction on the back of no news announcements. Do you have any insights into this?
Well, there are quite a few factors that can lead to significant share price volatility. It's important for investors to manage their stocks and take profits when share prices have run too hard and valuations look stretched. In the case of DroneShield, the stock appears to be trading at a significant premium to fair value. High valuations often spark a sell down, especially amongst investors who aren't exactly long term. For this case, there are also only 2 analysts covering the stock, so there's limited valuation insight.
Yes, Charlie, the lack of analyst coverage can certainly lead to higher earnings uncertainty and valuation uncertainty and the potential for negative surprises over the reporting season. Furthermore, I noticed the fact that DroneShield CEO Oleg Vornik, he sold 100% of his shareholdings earlier this year, which may have raised concerns among investors about the leadership's confidence in the company's future.
Yeah, it's a valid concern, Ken, when the CEO no longer has skin in the game because management and shareholder interests are less aligned. However, it is essential to consider the context and reasons behind the sale, which might include personal financial planning or other non-company related reasons.
Yeah, it was quite a large share sale, but it looks like in this case that Oleg and a few other directors, they did sell their shares for tax purposes as they were issued stock options earlier in the year. And looking at the volatility in the share price, remember, volatility can often create opportunity, especially when there are no news impacting the fundamentals. But with any emerging opportunity, investors really need to do their own homework before they commit their capital into this stock.
And for those who are trend sensitive, it may be best to wait on the sidelines for now, given that the stock has breached the SD30 TSR and thus is triggering an exit.
As we approach the month of August, a few of our members have been wondering whether there will be any star stock additions over this reporting season. So a useful question this week is, what stocks are on our watch list for potential star stock inclusions?
Well, a good starting point in identifying potential star growth stocks is to use the Stock Doctor filter tool and select the following fields: star stock status, change that to non-star stock, strong or satisfactory financial health, net profit margin greater than 5%, forecast ROE greater than 13%, EPS growth and earnings revisions greater than negative 10%, and average daily trade greater than 200K. We also want consensus forecasts to be greater than 0.
Yeah, so that you have forecast numbers there. But going through this list, the stocks on our watch list includes Lovisa here. You've got Supply Networks, Telix Pharmaceuticals. We've got James Hardie, REA Group, NIB Holdings, Fisher and Paykel, Seven Group, DroneShield. We've talked about them, and also Arb Corp as well. And many of these stocks can also be found in Tim's growth filters with potential. So you can feel free to look at that list as well.
Yeah. And Kien, from an income perspective, the fields you can apply are gross dividend yield, forecast year one greater than 5%, an average daily trade of greater than 500K, franking greater than 90%, and earnings revisions greater than negative 10% to avoid yield traps. It may also be a good idea to include the ex-dividend date so that you can take advantage of upcoming dividend payments.
Yeah, so if you're looking for potential dividend paying stocks or income stocks from that list, the stocks we are currently monitoring include, we've got Ampol, ALD is the code there, Bank of Queensland. We've also got Bendigo Bank, there's Medibank Private, NIB Holdings, those health insurers, also QBE Insurance as well, AGL, G8 Education, TPG Telecom, JB Hi-Fi, and also an interesting one, Monash IVF as well.
There are a few interesting companies there, Kien. Once again, many of these stocks can be found within Tim's income filter with potential. And remember, before you invest in any of these opportunities, make sure you do your own research and contact the analysts for a chat if you need extra assistance.
Yeah, we're always here to help you, aren't we, Charlie? And again, thanks for your insights today. It was great to have you on board.
Yeah, it's great to be here again. If you have any questions with today's episode, feel free to participate in our Lincoln Live webinar this Monday.
And also, if you know any family or friends who think will benefit from Stock Doctor, we would appreciate your referral. Remember, our business is driven by our members, and we wouldn't be here without you. So thanks for your ongoing support and loyalty. In the meantime, have a happy, healthy, and prosperous week ahead.